Thank you for having me.
Yeah, tell you do things in the trading world. Tell everyone a little bit about what your background is, as well as I believe you have like a community that you help educate others that want to learn same sort of strategies that you've been using for quite some time now.
Yeah, sure. My name is David Chau. I was recently featured in the Wall Street Journal for moving markets. We trade the SPX, so that represents the SP 500, and I manage a community of over 1,000 plus members. And I also manage my own hedge fund.
Oh, nice! I didn't know
Yeah.
you do a hedge fund too. What was it like getting featured in the Wall Street Journal?
Initially, I didn't really want to do it just because like I'm an introvert. I like focusing on like my own work, and I don't like being in the public eye like that. But I mean, I guess like good things and bad things came out of it. Um, but yeah, it was a new experience.
Yeah, you didn't. I don't know. It's like nice to be recognized at the same time, though. It depends on what kind of recognition you're receiving and for
Yeah,
what.
especially like as a college dropout, I didn't really have anything to show for, and just to have this kind of made things a lot better for me. So there, there you go.
Yeah, we're here. So you dropped out of college this when you started getting some success in trading. Like, walk us through how you made that decision, because I think I'd be too scared to drop out of college.
Well, I'm 31 years old now, and I dropped out of college my second year. Wasn't well. I was let's just say I didn't have a choice. I was failing all my classes, failing my business classes and just like things like that. It's kind of ironic because I'm running my own business now. But that kind of forced me in a good way to kind of pursue what I was already doing. I was at that time I was an early investor in crypto. Like it was like $4, and I had my own mining business in my dorm rooms, and because we were getting free electricity and stuff like that. And because that didn't really take too much time, I was able to do other things like trade stocks and learn technical analysis and all that fun stuff.
What was the first trade that you did when you started getting into this? Can you remember?
Well, the first trade that I ever did, I honestly I don't know. It's been so long. And and yeah, it's the first trade I've ever did. I know like the first trade I've ever done that has made the most money. That was like what was memorable.
Yeah.
So I think that the largest trade I made for stocks was I had portfolio margin, and there was a neat way to do this, right? For selling cash secured puts. You're a bit familiar with it.
Selling puts.
Yes, when you're selling cash secured puts, you're putting up money um for you're selling a contract, and you have obligation to buy stock at a given price. And so one day I'd use my portfolio margin to sell a cash secured put on Mara, which is a crypto stock. And
Mm-hmm.
then I got assigned, and so basically whoever I sold the contract to sold all their puts to me. I sold all their Mara contracts to me. And I woke up with like $500,000. So yeah. I think that
How?
that month, yeah, that month specifically, I think the most I made was about $1 million.
And this was when you were like failing school.
It was a bit towards 2020. So when I was failing school, that I mean I dropped out my second year, but I mean at that I wasn't failing business. So I think I was a bit further ahead than a lot of my colleagues, and I think I still am now.
Yeah, I mean, school doesn't teach you the things that you've learned. I mean, the best way to learn anything is just to do it, practice, read about it, and continue to work on it each and every day. Versus school, a lot of the material is outdated that they're teaching you anyway. So the things that you're learning don't even apply to what's happening in society as of now.
Honestly, that's the same for stocks too, like because I think back then there wasn't too much material to like learn from. Everything was very traditional. And it was like everything you learn, it's just what it is, right? It's not like they're not challenging you to think outside the box. And so at that time, when I was starting to learn, like when I started to learn trading, I opened up an account when I was 18 years old. And so when I started learning trading, I was doing like YouTube and all that stuff. But all the YouTube content is like outdated now, you know? So,
Hmm.
and I still think it's true. I think like some of the worst traders like create content, and then some of the best traders are not. So how can we like learn and connect with people that are actually doing well like that? So
Yeah, I mean, I think it was Charlie Munger said during a shareholder meeting, if someone's really good at what they do, why in the heck do they need to sell you a course on how to do it? Wouldn't they be doing it or building a enterprise to have more people doing it for them so that they don't have to?
yeah,
And I feel like that's like what we've kind of come into now is like the best people are doing the work, but they're not being recognized as the best because they're not great at social media or they're just not doing it at all.
yeah. You know what? I get a lot of questions about like, hey, if the strategy works so well, like why are you sharing it? Why aren't you just keeping it to yourself? And if you think about it, like a lot of the largest hedge funds, like quant funds in the world and successful traders, they manage money through hedge funds. So, and that's through scale because they're trying to capture scale.
Yeah, I mean, Berkshire Hathaway has traders. Every large company that has securities hires traders to help them with their public portfolios that they have. I mean, how are you doing it? Are you currently doing everything on your own? Or are you starting to like build out a squad? I know that you're teaching people how to do these things as a hedge fund. Like, are you a hedge fund manager? Like, I wanna learn
Yeah,
more about David.
yeah. So like I started trading a long time ago, and then went into different things like venture capital. I'm a LP in a venture capital. I've had like portfolio company exits as angel, and then kind of transitioned into like inside options just because I had a lot of people asking like to how to learn stocks, and at the time I didn't really want to do it. Like just like with anything else, like I don't want to like put in that much effort to kind of teach people. But at the same time, like my wife was like, maybe you should do it, and like wife's always right, right? But I think
Yeah.
with running the community, like it actually brought out a lot of good things, as in like when you're trading by yourself versus like when you're making decisions for like 100 or thousands of so people, your decision making changes, right? And so we built up this community from 2020 to all the way to 2022, and then we launched our strategy, which is the SPX program. And that
Hmm.
wouldn't have came to life without CBOE releasing daily option expirations. So CBOE released daily option expirations in May of 2022.
And that's the Chicago Board
Board of
of.
Yeah, Chicago Board of Exchange. Yeah, they
Mm.
released daily option expirations in May. And so I was building a strategy a bit earlier than that, maybe like January, February. And so when they released that update, everything connected, and that's kind of like when Inside Options blew up. And I think to date right now, like we're up probably like over $10 million in revenue just from Inside Options. But with Inside Options, I mean, I I I like it because I'm not spending too much time in it, just because our strategy doesn't actually take that much time. We usually spend like 5 to 15 minutes at the close, at the max. And then once I saw that the strategy was working, kind of put together capital and built a hedge fund, just because, like with hedge funds, you can scale much larger. And so I operate a 506 B, so I can only take accredited and qualified clients.
Got it. Now, with every great trader, there's also times where it gets a little dark. How do you manage those dark times when things are not going correctly with this with any strategy?
I mean, we haven't had a losing month this year, so it's just based on how we structure our strategy, really, because every single so our strategy is comprised of a series of trades, and we don't break it down by individual trades because you can't avoid drawdown permanently like that.
Mhm.
Yeah, so I guess we'll talk about like if you want, we can talk about the strategy, even though I'm not supposed to, but I think it's important to kind of explain the concepts of
Yeah, I
why.
mean, we could talk about the concepts, but without giving away like exactly what someone would do, without being able to copy it directly.
Yeah, yeah. So let's talk about it.
I mean,
So
you mentioned it a little bit. It sounds like you're doing things at the close only.
yeah, we're doing things at the close only, just because we trade SPX and it's a cash settled index, so we don't get assignments or exercise contracts. And the Black Scholes option pricing model works very well for the SPX at the close. And so in the Wall Street article that was featured, it goes on and talks about how our size often, it moves markets, and sometimes it's larger than JP Morgan's like collar trades. And so in the article, it talks about how we use a strategy known as the martingale strategy. You ever heard of that?
Just did.
You did? Yeah, so martingale strategy is a statistical like strategy used in like casinos. Like for example, if you're playing like roulette or blackjack or whatever. And to be clear, like I don't gamble a lot. No, I don't even gamble. Okay, so I don't gamble like that, and it this martingale strategy does not work in casinos, right? But what the martingale strategy is, it's a concept of placing one bet, and if you lost that bet, you will double up. And at some point, you could lose like 9 trades in a row, and at the 10th trade, you might be able to win that trade and make all your drawdown bet. And so
Yeah,
that goes with the principle that we believe that accuracy in the market does not have a one-to-one correlation to profitability. Meaning that if you have a 90% or even a 99% accuracy rate, you can still be losing money. Whereas for us, we only need to be right, 16% of the time to make money in the market, which is a lot better because then you don't have to be right or you don't have to be wrong.
yeah. That reminds me of I went to school for math, and it reminds me of Bayes' theorem using like conditional probability.
Yeah,
So like I tell people like, you watch any sports at all? You have any like sports that you pay attention to?
I don't. I used to play paintball as a sport.
Paintball.
Yeah,
Yeah, it's kind of like, hey, if I lose 10 paintball matches in a row, the chances that I win the 11th one is going to be higher. But most
well,
people look at just like the one flip of a coin, right?
yeah, but the coin flip is really different because coin flips are independent events, still as roulette and whatnot. I mean, for blackjack, they back then there was the MIT blackjack team, and so
Mm-hmm.
they made like hundreds of $1 million just because they cracked the code to the statistics. Because if there's 52 cards in the deck and more low cards come out, there's a higher probability that there's gonna be a higher cards in the deck, similar to the stock market, because there's
Right.
252 days in the stock market, trading days. And it's
Yeah, it's
interesting
been
because
it's, it's been on quite a run.
it's interesting that you mentioned coin flips too, because coin flips are 50-50, right? And so if we took a bet and you bet uh every time you won a bet with a coin flip and you made $20, and every time you lost a bet you lost $10, you would have a positive expectancy, meaning that
Mm-hmm.
you're guaranteed to make money over time.
Yeah, because it's 50-50. But in terms of maybe I'm looking at it different, but in terms of like coin flips, but the chances of getting like 5 heads in a row, would that be different than what we're talking about here?
Well, to get 5 heads in a row, it's not 50%, right? So
Right, it'd be point
and this
five to the fifth.
Yeah, so if you translate that over to the stock market is a bit different, right? So the stock market has built-in statistics as well, and the options pricing is the formula is based on Black-Scholes for SPX, and
Mm-hmm.
Black-Scholes takes into account implied volatility, strikes, and all that stuff, and so that would effectively represent an efficient market. So what an efficient market is that what it means is that all price reflects all current information, and basically it in addition to that, it basically means that the market is willing to pay you based on the risk that you take. So if you
Mm-hmm.
risk $100 in the market and your loss is if you risk is 100 and your reward is 100, you have a 50-50 probability. But the what's interesting about the stock market is that you can adjust your size, your trade strike selection, and build a standard deviation, which has about a 68% chance of winning. So if you take that to the fifth, you have a 99% chance of winning a series of trades. And to go back, the martingale again strategy doesn't work in casinos because there's table limits. So if you were to go play roulette or blackjack, and then you're like I'm gonna double my bet because I heard about this podcast. Well, that's not gonna work because there's a max limit, so you can't double your bet after you hit that limit. Whereas in the stock market, there are no limits. So theoretically, if you had an infinite amount of capital, you'd never lose.
So essentially, what you're saying is the table games put in the minimums and the maximums to avoid someone being able to use this against the casino. However, in the stock market, you can put as much in as you want. There's no limit.
Yeah, that's correct. I mean, the casino is one big business for it's a statistical based business, and so is the market. So
Yeah, I've been working on a strategy called like the value snapback with like large cap companies, and essentially taking certain data to help identify some trends of potential entries into different positions. So I just got it to work like a month ago. Uh, so it's been interesting seeing it run every day and seeing like how it's ranking things. But essentially, you are like a one stream, uh, one stream strategy. You're just doing SPX, and that's it.
yeah, the reason why we trade SPX only is because it offers tax advantages. The 60/40 for capital gains, 60% tax as long term, 40% tax as short term.
On every single trade, right?
Yeah, SPX is the 1256 contract.
Got it. Because that's a lot of thing like day traders get into is like, you know, if they're just day trading an individual company, then everything's being taxed at short, but that eats into return. So
Yeah, but I've never met one successful day trader. Like I think the statistics are like over 95% of day traders fail. But at the same time, like 100% of the time, the stock market makes new all-time highs.
yeah, we've had one other person who said they were a successful day trader on. I've uh I've been chatting with someone that works at Dub, this like new app Dub where you can like copy trades, and there's someone on there called like Brett Simba who apparently is like crushing it. I don't know. It's like hard to know like who's real and who's not, and it
And
seems
yeah,
like
that's the thing, because like I've been doing this for a long time, I think, and I join every Discord groups, every program courses, and watch every YouTube videos, and just you just never know, you know. So
yeah. So how could someone decipher like who knows what they're talking about, such as David, versus just like watching free YouTube videos and hoping it works out?
well, first of all, you have to try it first before you knock it, right? And so
Yeah.
I'm a big believer in trying something first, even though it might seem like scammy or whatever, and then decide for yourself and make sure you don't lose a lot of money off of it. But I would say the biggest differentiator is just like seeing if they're posting like live alerts where people can actually track and follow, and sometimes the alerts that they post might have discrepancies with the pricing, because sometimes somebody might get in at a certain price, and then when they post the alert, it's like at a different price, right?
Hmm.
Especially with like low float stocks. And that's why I don't really trade stocks. I trade options specifically, just because everything is verifiable. And when you're trading options, SPX is one of the liquid markets in the world. So if I'm filling an iron condor for like uh $180, somebody else is going to be able to fill it at that same price too.
Right. And for anyone that might be listening, an iron condor is a two different option strategies put together. So it's what
It's
let's walk through it for anyone who might not know what that is.
Yeah, so an iron condor it's not two separate options put together. It's comprised of four different legs. A a buy call, a sell call, a sell put, and a buy put. Effectively, it's just a range. And the
Hmm.
purpose of the iron condor is to make money when SPX stays within the range. Kind of like basketball or tennis, or the ball has to stay in the court.
Right. Yeah, I've never done one before, but I've heard of some folks that have done it. And I was talking to one friend who works at a large financial institution. Apparently, they didn't do it correctly or something. I don't know. Something went wrong.
Yeah, actually, if you trade So with positive expectancy, right? I talk about this a lot in my program. So when you trade, there's 252 trading days in a year. And if you trade just one contract every one iron condor specifically every single day, you will lose money because it's negative expectancy.
Got it. So that's like the difference is like you have to have enough chips on the table in order to be able to go through the losses to get eventually get to the win. And then eventually when you get to the win, the strategy set up so that way that win could cover the losses and then more.
Well, that's the martingale mechanic. But I'm talking about if you're not using any mechanics and you're just trading one contract iron condor every single day for 252 days, you're gonna lose money because it's negative expectancy. And that's why we don't since martingale is just a mechanic, we don't trade every single day. We only have a handful of trades, every month.
Got it. So you're looking for certain like indicators to turn green before even making any sort of decision.
Well, it's quantitative, so it's based on expected value. The so if it shows that this specific data set has positive expectancy, then we'll trade it.
That's very cool. Did you like build that out? How did you come up with that?
Well, it's evolved, like so when we started, we had to figure everything out, and
Mhm.
we're just going ham, and we're trading iron condors literally every day. And then we started looking into the data because you can't backtest before 2022 for daily option expirations because they just released it, right? And so we had to collect data and eventually looked at the data and saw that hey, we could actually make more money not trading negative expectancy.
Got it. So you figured out that that was a variable that you don't even want to have in your system, and you're like, let's
Yeah.
just remove that variable from our decision making
Yeah.
altogether.
Yeah, a lot of people are watching and are like, well, how do you label the positive expectancy or whatever? It's just a specific data set that we label every single day. And so we have names for every day. So every day has a specific label. And so when that label pops up, we just skip it or we trade it.
Seems like it's just real binary, just ones and zeros.
Yeah, exactly. It's binary.
So you've been successful at trading, and then you decided to open up this community that you're a little bit skeptical of. But it seems like you've been enjoying being having more, you know, more people to share the wins with. In terms of like building out the community, what kind of people are coming in at the beginning in terms of like looking for that education that you're able to provide them?
Well, yeah. So when I built a community, I started off with like a free community, like a Telegram group, just like for fun, and eventually just turned it into paid because there's like just too many people like that just like are kind of wasting my time, like and then I mean that was a good shift though. But we started off with like one person, and then it exponentially just grew to like 1,000 plus people. And the initial growth was a lot from like social network, like my social network. But nowadays I'm not getting a lot of people that are joining from my network because I've exhausted it.
Mm-hmm. So what are you hoping to do now?
I mean, we run ads, we run paid ads where we have a positive ROAS, and besides trading, like I like systems and processes. I like seeing how businesses work. Like I've done business even before, doing stocks and options. And so this is kind of my passion, just being able to see how things work and be like, oh, that's how it works. That's kind of like building the strategy, right? Like I like systems and processes, seeing how things work, seeing how to improve it.
Yeah, I mean, any person that's looking to start a business or is in business, if you're not setting up systems, you're basically just winging it every single
Yeah.
day. And that makes life a lot harder. And now with AI and all the tools that everyone has, like you could, you don't need to hire as many people as you did just before all of this started rolling out. So I feel like there's like really no excuse to get started now with all the tools and what AI has the ability to do.
Huh. Yeah. You know what? I use AI quite frequently, but I've never used it to kind of build my business because AI wasn't available really back then. It's pretty new. But
Mhm.
yeah, I think if somebody is connected to the right person and has the right knowledge, they shouldn't have any excuses.
Yeah, it's just a matter of like, well, sometimes it takes time to learn the tool, and then it's like figuring out like, well, do I even want to put in the time to learn this tool?
Yeah,
I mean, for my business, I mean, right now I'm focused on marketing. I have no idea what I'm doing marketing. Every year gets a little bit better, but I'm still looking for like that aha moment where everything's just like rolling and rolling and rolling. And it
yeah.
seems like you found that early on with your trading strategy.
Well, yeah, the community and the strategy, right? The strategy is what without a working strategy, like the community will not grow. Like, why would anybody join if the strategy doesn't work, right? So
Yeah, I mean that's what
having a
Michael Jordan said. I mean, no one would buy my shoes if I was averaging 5 points a game.
yeah, and that's a good way to put it. But yeah, like if for I don't know if somebody came to me and they're like, well, I have this product or service, I can give you the full system on how like I built my business, but I'm not it's not guaranteed to work for yours because
Hmm.
somebody might not buy it and you might have a different return on spend and whatever. We spend like probably like around 150 to 200 grand in just ads.
A month?
Yeah,
Holy crap! That's a lot of ads.
yeah, and I think we're averaging like maybe a 4-to-1 ROAS.
That's pretty good, isn't it?
I think so. Yeah.
So these are all people who are like coming into the community to start learning your systems and everything within the community. Like it's just like videos. Is it live? Is it like a hybrid? Like if someone who wants to join the community, like help us paint a picture on what that community looks like on the inside.
Well, it's not too complicated. Like it's not too fancy. Like so if somebody enrolls in the program, they'll get access to like a training portal, which kind of shows you like how to open trades, how to close them, how to use our tools to calculate the doubling down, whatever as I would call it. And we don't
Mhm.
again, we don't actually double down, right? There's a specific way we do it. But they get everything that they need in order to get started. They might not understand everything just because everything that I built is also proprietary as well.
So everything inside is things that you built on your own as far as like the tools, and then there's like a learning curve on how to use those tools inside the system that you built.
Yeah, I think that I mean we have a lot of the demographics is pretty wide. We have a lot of people that come in with zero experience. Like we had somebody's this member's wife, she didn't want to trade and he got her hooked on it. So this is like her full time now.
Oh wow, is she trying to rope the husband in now?
I think she might be making more than him.
That's pretty cool. Yeah, I mean, a lot of people would be scared to get into this though, just because of like the stories that you hear. It's like, oh no, like what if it doesn't work? Like that sort of thing. Like that sort of fear of loss can definitely creep in because people in money are just so
That's
emotionally attached.
That's called risk aversion. People feel losses more than they feel wins. But yeah, that's also why like you ever see those like quadrants like where it shows like this quadrant is like employees and this quadrant is like business owners. I
Yeah.
think it was like by Robert Kiyosaki. Maybe he might have been the one to do that. But just it requires like a certain type of person in order to take risk and be able to spot opportunities and take action on it. Like I have some people where even if I would have even if I gave them like money to trade with, they wouldn't trade because they're so scared,
Hmm.
and that's the reality of it. So
Yeah,
it's
I was curious one time, and I started seeing that they hire people to like trade other people's capital.
who hires who to trade whose capital.
Like I've seen like companies will hire people once they pass like a certain exam to like start day trading.
Oh, are you talking about prop funds,
Yeah.
prop firms? I think prop
Mhm.
firms are probably like the biggest scams.
Oh man.
They pay out, but just the business models of this is a huge scam. Just because you know how prop firms work.
Oh,
These are
I have no idea how they work. I was just like, I wanted to look into it because I was like, hey, maybe I have some free time. I can start doing some things.
so trading, like the statistics for trading, day traders they already have a high failure rate, like
Hmm.
95% plus or more. So when you're trading for prop firms, they also have rules within their prop firms that you can't hit like a trailing drawdown or they set a lot of things to increase the failure rate for you. right?
Mhm.
And so like out of like 1,000 people that pay him, $300 or whatever, 90% of them might fail. I don't know, it might not be 90%, but a high percentage will fail. And then they might get like, I don't know, a small handful of people that got lucky and made it, and those people get paid out. So it's almost like a huge like pyramid.
It's like a casino. They know how many people are going to fail, how many people are going to succeed, and exactly how much money's going in and out with certain parameters in place.
Yeah, exactly. So I've never been a fan of it, but I think it's like a good uh it's a good thing just to kind of practice, because it's better losing like $300 than losing like 100K or whatever your life savings. So
Yeah, I mean that's the scary thing. But I mean, most people that get into day trading, especially like on Robinhood, like people who are like on their phone trying to like day trade while they're working at the same time. I have friends that do it. I was like, bro, you're just you're just straight gambling at this point because you can't be doing like multiple things and not have a system in place and expect to be successful. Yeah, you get that one big win and that fuels you for the next X amount of time, and then you get this false sense of, false sense of hope that you actually know what you're doing.
yeah, you're right. I mean, that's the reality of trading, right? Like if you don't know what you're doing, you're just gonna be doing whatever, right? And you just fall into the statistics of other traders. Um, and it's just it's hard to learn. Like it's hard to learn because there's so much information out there, like YouTube tutorials, and like I said, sometimes it's outdated too. Um, and even when you're given like a blueprint, like with my community, like I have over 1,000, I don't know, like what is it, 1,100 right now. Even if I give them like instructions on how to do things, okay, always a handful of them just miss the trades, or they just do their own thing, and like that stuff happens. But then there's always like a really good amount of members and people that are just like, I'm taking this seriously. This is my business. This is this is my vehicle that's gonna make me successful. And so they follow everything thoroughly.
Mm-hmm. So with the community, I think I was doing a little research on it. You recommended like a certain dollar amount to have before starting. I think it was like 20 something thousand.
Yeah, the minimum that you need is $26,000, and there's a specific reason for it. Like first of all,
Well,
you need to, like, if you're trading with just $500 and you're making like 10%, you're only up like $50, right? Like
yeah,
it's not life changing, right? But of course there's a program fee. We charge for this paid access, and with $26,000, you have enough capital to withstand those drawdowns with the Margale strategy, and you can also make enough to cover the program fees.
so basically, with the strategy, with the system that you created, essentially you set it up so that way, if you have this minimum amount of capital, it'll cover losses, cover the fees, and then basically you're getting the program for free once everything starts to work out correctly over time.
Yeah, exactly. It's quantifiable, and so that's the thing with the strategy. It's predictable in a way where you know what you're gonna make, like, I don't know, every year or every month or whatever it is. And then the fun thing about it is when you use the compound calculator. And I go to this website called thecalculatorsite.com, and with that site you can actually compound monthly, right? So if you put in $26,000 and you compound 100% a year, as an advisor, you've never heard of anybody making 100% a year, right?
Not on average, no.
Yeah. So go in and type in that number, 26,000. You get 100% annual return. You compound every month, right? In about 70 months, you're up like 7 million. That's the calculation for it. So,
So at this point, does it get boring?
what do you mean? Does it get boring?
Like, does it get boring just like doing this over and over at all? Like, do you ever
That's
get
the
bored of
point.
it?
Well, I trade not to have fun. I trade to make money.
Hmm.
I mean, I think it's fun to show people, like, if I were to pitch this to myself like 10 years ago, like, just because like back then, like I did a lot of investing. I invest into like VC funds, and I know those, like, what high returns are, you know, especially with portfolio company exits. And so if somebody pitched this to me and they're like, this is what you're gonna might make be making like over a year, I'm like, dude, this is such a BS. Because the S&P 500 returns like what, like 10% a year or something like that. And so you always hear this like this you always read articles about how nobody can ever beat the S&P 500 returns. And that's, I mean, now
Well,
that's really
that's
the
not
lie.
true. That's just, I mean, I look at it as like a lot of people nowadays are like, oh, I'm just going to invest in SPY because no one can beat the market. And I look at that and I hear, and I read these things on like, you can go on Reddit, you can see the people like, oh, like never hire an advisor, never hire someone to like manage your money for you. And I look at it as like, one, it definitely could be done. And secondly, the more people that do investing that way, I look at it as the easier it makes it for other people who aren't doing it that way.
I think it's a good baseline, like for somebody that has no idea what they're doing, because they're gonna lose their ass. Like I said, like over 90% of people that's gonna be trading, investing on their own, they're gonna lose their ass. And so I think it's always best to work with somebody that knows what they're doing, you know. But eventually, like, don't get stuck in a bubble, and think that there's something else possible.
Yeah, people have a lot of limiting beliefs. I mean, you said your own. If you from now went to yourself in the past, you wouldn't believe what you said.
Yeah, I wouldn't, because like like I try to study everything. Like that's how I got into crypto early. That's how I got into a lot of things early. And it's just like I feel like there's, even if I were to keep looking now, I still look now. Obviously, that you can buy businesses, and you can buy one for maybe like 2 times a beta, and yeah, you make your money back in like 2 years, but still still doesn't beat what we're doing. Even a real estate, like sometimes if you join like syndicates and like real estate funds, sometimes might get like 20 to 26, IRR.
Yeah, well, obviously, real estate can go very wrong,
Yeah, we actually
and
get a lot
it's
of
not as liquid as the market is.
yeah, we actually get have a lot of members that are real estate professionals, like they have like the develop real estate, or like have apartment complexes. And uh, the last time I talked to somebody, they like sold their entire portfolio just to do this, just because you don't have to deal with tenants and things like that. And I don't invest into like real estate like that. I mean, I bought my home like with cash, but um like I'm not seeing like the opportunity cost is too much, so
Yeah, I've told some of our clients, I was like, what the best part about like investing in the markets are? They never complain. They're not going to call you. They
yeah.
don't break. I mean, they go up and down in price, but they don't like break down. You don't have to like repair them. It just makes life a lot simpler.
Yeah, if you're doing stocks, because like 100% of the time, stocks will, well, the SP 500 will make new all-time highs 100% of the time.
Yeah, and that's where we're at right now, or give or take.
Yeah, I think we made new all-time highs, especially with all that volatility earlier in the year.
Yeah, I bet that was a good opportunity for your strategy with all that movement.
Well, it works with anything, like it works with whether the market's going down or going up. Um, I read an article the other day where some of the largest hedge funds, quant funds, lost money in June and July. They couldn't figure out what was going on. Um, and
June
so
of July
that's,
of this year, 2025.
yeah, they lost like 7% or something like that. Um, and this year, I mean, we haven't lost any money. We haven't lost any money this year. Haven't had a losing month. We've been doing this for like 3 years.
When was the last time? How many losing months have you had, or do you even know? Can you count on
So
one hand?
so with Martingale, it, every every series of trades, because with Martingale it's a series of trades. It's not like independent trades. So within the series, yeah, there's gonna be drawdowns, but at the end of the series, there's always a cumulative net profit, right? So once you complete a series, you're always gonna end up with a cumulative net profit. That's just the math of it. Because if you're
And that's
thinking
how.
about it, if you double down your bet every single time until you win, you're gonna hit that win, right? Especially if your trades has a 68% chance of winning, which is a standard deviation. So you have positive expectancy.
Within the one standard deviation.
Yeah, it's like flipping a coin, and you make 20 bucks, but you lose 10 bucks every flip. You'll have a positive expectancy. Or if I told you that you have to flip heads like 100 times in a row, that's gonna take a while.
Uh, yeah, I think the statistics there would probably be close to zero.
Yeah. So, but like I said, if you have an infinite amount of money, like you could go on forever. But it comes down to a point where you have to also calculate. Like, is it worth doing this if I'm putting up $1 million just to make 1% a year? Probably not. And so at that time, you would have to adjust your strategy, figure out like how much capital you need to deploy in order to make a return on the capital. So if you're making, I don't know, like if you're doing 100% a year, is it worth it? Hell yeah. So
Yeah, I've never learned how to do the sort of things that you're doing. I did stumble across like a strategy from Yale professors called life cycle investing, where they recommend younger investors to invest on margin while they're young, so that the way they don't have to invest later in life. But in terms of your strategy, I mean, I had no idea it existed before we hopped on this
huh.
episode here.
Yeah, it's like I said, it's new, and we only have 1,000 so people, and just got featured in the Wall Street Journal. So we actually got a lot of people signing up from that. Uh, but at some point, I kind of want to close down the signups, just so I
Mm-hmm.
can focus on the fund.
So, in addition to this community, you also are managing a hedge fund at the same time.
Yeah, I manage a fund, but everybody that are investors in my fund just happens to be people in my community. Like
Mm.
they've been with me for 2 3 years. If obviously if they got results for themselves, I've built a lot of trust with them. So,
Yeah, I mean, I guess the question would be is like if someone could do it through your system, what would be the purpose of investing in the hedge fund other than
well,
saving the time?
because I know everything about the system on the back of my hands, and everything that I work on is proprietary. So I don't release everything to everybody just because we always get like a handful of copycats, and we that has happened. But every time that has happened, they've blown up. So yeah.
Yeah, it's funny how you can like show someone something and then they think they know it all, but like there are certain things that no matter what strategy that you have, they're still like can't be taught.
Yeah, and but the thing is that it, I want to make it systematic as possible, right? So like if I get hit by a bus tomorrow, I want to make sure that my family or my friends or just the people around me can still run the system, because we spent, I don't know, 3 years kind of working on this, and every few months we come up with something new, and we build new rules, and like risk management and things like that. And um I want I want a systematic strategy. you know Sometimes just discretional like decisions, like on how we manage risk. That's about it.
Has there ever been a time where you break a rule?
Once, yeah, once, last year. Like, so with our strategy, we've been doing this since 2022. There hasn't been more than 5 consecutive losses, right? Because we're using the martingale strategy. And I think last year went to 6. And during that series, the rule of the strategy is that you can never use stop losses, because stop losses will hurt you, right? And you can
Mhm.
never you basically have to hold your trade all the way to the end of the day, because the statistics are realized at the end of the day. And the rule that I broke there was that I just didn't we skipped, and we just ended the series there, right? We didn't escalate with their sizing, and the next day, had we done it, would have been a loss. Um, but because we didn't lose anything that day, we continued with our trade, and we were able to survive, uh, the entire series.
Yeah,
So
I mean
so
that's risk management 101 right there.
yeah, because one of the biggest questions I get, when we talk about the strategy, is like, what happens if you lose like 6 times in a row or 7 times in a row, right? And a lot of people miss the fact that the system, it produces positive expectancy, meaning that If you have $26,000 and you grew it to like 100K, you have a significant amount of profit. You could trade with house money. You could take out your initial principal, right? Once
Mhm.
you take out your initial principal, you're risk free. There's actually a YouTube series. One of our members, he created a YouTube series online. I would have to find it, but he documents his entire journey for the past year. And he started with like 26 grand. He's up like probably $95,000 right now.
Mhm.
So that's like maybe he started in February last year. So less than 2 years. So he's
So
up like 200 some percent.
yeah, it's pretty good.
Yeah.
So why wouldn't everyone just do this, other than like being scared to lose money?
I I think we're getting there. I think like I said, we spend 150 or 150 to 200 grand in ads. So we reach a lot of people. So it's either one, they don't trust us. Number two, they think they could do it on their own. Um, and number three, they think it's too risky without understanding the entire context of it, right? The positive expectancy and the statistics behind the Black-Scholes option pricing formula and just all that stuff, you know. People think
Mm.
they're smarter than the system. So, but
Well, the system
that's
is
my
put
yeah.
in place so that way you don't do something silly.
Yeah, I mean it's my opinion at the end of the day, and I mean that's just kind of like what we've seen people do, so or they just don't have capital, right? Because trading is a business, and you're not going to be able to withstand that many that long of a series with like $500. You need a significant amount of capital, just like any business, right? Like if you're to buy real estate, you need a good amount of capital too. If you're to buy a business, buy real estate, uh, angel invest, VC, whatever it is, you still need capital, right? And 26 grand is way better than spending 100 to 200 grand.
Yeah, I mean, if someone has money in a 401k, they could borrow against it for a little bit and see if this strategy could work out
Yeah.
with
Well, the
not taking that much risk.
401ks, you can't trade options. Well, you can't trade spreads because you
Well,
can't
what
buy
I'm
on
saying is you
market.
can take a loan against your 401k, and then you get that capital in your bank account. And now you have something to play with. So you can take some money out and then you can pay yourself back through
Well,
payroll.
why wouldn't you roll into a Roth IRA? Because
If
that's
you're
tax
still
free.
working there, you couldn't take it out.
Well, I guess I have a solo 401k. So
So if you
actually,
stop work, if you quit your job and say, "Hey, I'm going to take my nest egg and bet on David's strategy," yeah, but most people won't do that just because of the
yeah,
fear involved with it.
we had a handful of investors in our fund that invested with their 401ks. Actually,
That's cool.
with 401ks, you can invest into funds, right? I can't use my own 401k to invest into my own fund, so
Mhm.
but other people can.
It seems like this strategy you can do inside like a Roth or an IRA, to avoid taxes altogether as
Yeah,
well.
the strategy would be to use the Roth IRA. There's just contribution limits, and so you have to do backdoors and stuff like that. So
Well, what I'm thinking
mega
is,
backdoors.
you, I guess, looking into more higher net worth people or business owners who are able to do like mega Roth backdoors and things
Yeah,
like that.
at that time they would probably just invest into the fund. So
Got it. Well, this was fun.
yeah.
Is there anything else that we didn't cover that you were hoping to cover to share with the world?
Well, other than just self promotion, like if anybody wants to learn a bit more and trade, all they have to do is kind of visit my website, which is insideoptions.io.
Awesome. Well, David, thanks for hopping on. We'll see everyone
All
next
right.
time.
Yeah.
Bye.
Bye, guys.